How bonds shape the foundation of investment banking. Hi, welcome to Finance Fusion, your clarity code for complex finance fundamentals. Today, we'll decode how bonds shape the foundation of investment banking. What is a bond? What factors affect the bond prices? How do bonds generate returns for investment bank? And the foundation of investment banking, bonds are essential in determining the direction of the financial system. Bonds act as a debt instrument, fixed income, linking issuers to capital markets so businesses and governments can raise money for initiatives and operations. Investment banks help create capital by serving as intermediaries and facilitating the issuing and the trading of bonds. Investment banks lead to intricate dance of bond transaction, from market making in the secondary market to underwriting in the primary market. Bonds have an important role not only in traditional roles but also in the global capital flows, risk management, and innovative projects like green finance. This introduction lays the groundwork for examining the intricate way that bonds form the basis of investment banking. Number 1. Capital formation. The ability of investment banks to raise money through bonds is essential to their ability to operate. Investment banks play a vital role in complex dance of the financial market as they help governments and enterprises raise funds for a wide range of products. Investment banks ensure a smooth flow of cash flow of underwriting and coordinating the sale of bonds to investors through bond issuance. For organizations looking for funding to launch a new business, grow their operations, or complete important infrastructure project, this procedure becomes very important. Gross fixed capital formation in Indian economy increases from 32 lakh crore in 2014-15 to 54 lakh crore in 2023. Primary market activities. Investment banks plays a crucial role as a middleman between issuers and investors in the primary market. They are essential to the underwriting process and help with terms and conditions, initial offering prices, and bond offering structuring. Issuers are able to effectively access financial market thanks to the facilitation. Fees for this underwriting services provide investment banks with a vital source of income, highlighting the vital importance of primary market operations. Investment banks, as designers of the capital market transactions, are essential to the smooth raising of capital for issuers as well as the vitality and the liquidity of the larger financial system. Number 3. Secondary market trading. Investment banks switch from underwriting to acting as a market maker in secondary market. This facilitates the liquidity by bringing together the bond buyers and the sellers. The secondary bond market is a marketplace where investors can buy and sell bonds. A key difference compared to the primary market is that proceeds from the sale of bonds to go to the counterparty, which could be an investor or a dealer. Whereas in the primary market, the money from investors goes directly to the issuer. Bondholders looking to trade ahead of maturity are served by this marketplace, and investment banks are essential to preserving this market order and guaranteeing the reasonable price. The trading operations not only give investors an important role to purchase and sell bonds, but also improve the secondary market's general effectiveness and openness. As a result, investment banks acting as a market intermediaries maintain the bond continued life after they are first issued, creating a lively and adaptable atmosphere for the secondary market trading. Number 4. Credit ratings and due diligence. The foundation of responsible bond underwriting in investment banking is due diligence. Investment banks examine financial health, creditworthiness, and repayment ability among other factors when evaluating bond issuers' credit risk. Credit rating agencies, which are often hired by investment banks, assign credit ratings to bonds in this thorough assessment, providing investors with important information about the risks. By matching products to potential investors' risk profile, this rigorous method guarantees that the investment bank follow an ethical underwriting process. Investment banks provide openness and support and the stability and the integrity of the larger financial markets by assisting in making a well-informed decision. The greater the credit risk on an investment, the higher is the yield investors demand to compensate for it. Credit ratings are issued by rating agencies and can be determined by calculating the probability of a default or any other credit event. Number 5. Innovation in green and sustainable bonds. Without a doubt, investment banks are setting the standard for green and sustainable finance, bringing about a revolutionary change in the way people make investments. These institutions are essential in helping to issue green bonds, which are meant to be used as funding for any eco-friendly projects. Investment banks go beyond simple facilitation to actively participate in creation of frameworks that evaluate projects' environmental impact, guaranteeing a consistent method of evaluating sustainability. Additionally, they also support openness in how the proceeds from green bonds are used, bringing the financial markets into line with more general sustainability objectives. Investment banks act as a positive change agents in this way, promoting the financial innovation toward a future that is much more ecological, conscious, and sustainable. Number 6. Technology and digital bonds. Without a doubt, technology integration is changing the investment banking industry and bringing a lot of innovations like blockchain-based solution and digital bonds. Technology has made it possible for digital bonds which simplify the issue process and reduce the administrative burden while increasing the transparency. Investment banks are using technology to streamline settlement process and increase trading efficiency in bonds. In particular, blockchain-based systems provide decentralization, transparency, and safe platforms for bond transactions. The adoption of digital changes by investment banks is boosting operational efficiency and laying the groundwork for a more technologically advanced and flexible financial markets in the future. This technology infusion represents a paradigm shift. To sum up, bonds have a profound impact on the basis of investment banking that goes beyond conventional responsibilities to cover a dynamic and changing environment. The bond market is shaped in a part by investment banks, which do everything from participate in international capital flows to embrace sustainable finance innovation and manage interest rate dynamics. The symbiotic relationship between investment banking and bonds continues to be the forefront of the economy advancement as we observe the ongoing evolution of financial markets. Our journey into this financial clarity doesn't end here. Explore our archive of videos for a wealth of knowledge just waiting for you. If you found value in our today's video, give it a thumbs up, subscribe for our future insights, and share it with your friends. Remember, the more we learn together, the stronger we become. Thanks for being part of the Finance Fusion, your compass to financial enlightenment.